Back to Asian stocks and a rally to end the week. Major markets in Japan, Hong Kong, and Singapore surged more than 2%. And there's optimism that the worst of the credit market crisis is now behind us. Our next guest agrees with that statement. Dariusz Kowalczyk, investment strategist at CFC Seymour, joins us tonight on the program. So you agree with Secretary Paulson that the credit crisis is more than half over?
I think most of it is over by now, because the market understands where the problems lie, how big potential losses are, and banks have taken write-downs of the magnitude that probably will be almost sufficient to cover these losses. Plus, policymakers have shown that they will do anything to prevent a deeper meltdown. The markets agree. When we look across asset classes, it seems that risk aversion has subsided quite dramatically, and I think that we will not see any more such low stock indices levels or such wide credit default swaps as we did in March.
Well, okay, the worst of the credit crisis then is behind us, but you still think the U.S. might fall into a technical recession, either in Q2 or Q3?
Exactly, because although the market seems to have stabilized, the impact on the real economy, I believe, is still largely ahead of us. There will be further declines in prices of houses in the U.S., which will hit household net worth and consumer spending power, which will slow the overall growth, and I think will push the U.S. into a technical recession in the second quarter, third quarter, maybe even the first quarter data will be revised lower, because it's difficult for me to believe that we actually did manage to have some positive growth. So I think that still a lot of trouble will be ahead. Banks will take write-downs not only on mortgages but also on credit cards, auto loans, and so forth. So there will be some further trouble over the course of the year.
Yeah, but for the all-important jobs numbers that we're expecting today, you actually expect better numbers, just a drop of 45,000 compared to the 70K that people are looking for.
Yes, for April, when you look at various data, such as what jobless claims have done on average during that month, and indicators coming from the ADP employment report, as well as from employment sub-indices of ISM, it seems that the numbers will be better than they were in March, especially that March was sort of overstated by a major strike, which may be sort of taken back in the April data. So I think it will be a positive development.
And so you think stocks will jump back next week as well?
I think that there will be one more days of gains, especially in the US, maybe in Asia on Monday. But after that, all of the good news that we have seen over the past month are already in the prices, and I don't see another catalyst that would pull markets higher still in the near term. Right,
until the summer. You're expecting maybe a jump back up for stocks
in the summer? Yes, I think that following the good labor market report and possibly one small markup in equity prices, we will see some correction over the course of the rest of the spring. And then another wave of mortgage delinquencies in the US will probably push prices down in the early summer. Once that is over, the markets will recover towards the end of the summer and probably in the fourth quarter of this year as well.
Okay, let's look at some of the closing numbers then they expect from some of these benchmarks across the region at the end of this year. The Hang Seng, 27,500, the Nikkei, 14,700, and the Shanghai at 4,500.
Exactly. I think that most of the indices, such as Hang Seng, Tokyo, US, will end only about 5% up from current levels. However, Shanghai has much more upside just because it has declined the most, and because policymakers there will do all they can to boost the market, especially prior to the Olympics. So I think this will be the best bet among major equity indices around the world.
Dariusz, have a good weekend. Thank you for dropping by. I appreciate that. Dariusz Kowalczyk of CFC Seymour.